Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Wednesday morning. It is what is this? 2 days left in 2015. Wow. So at this point, I think, a lot of people are out, on vacation or, with their families, but the markets do have 2 more days to trade. And the past 2 days have been pretty strong. Last week we talked about the Santa Claus rally. Can we go from oversold back into the middle end of the range? And that's exactly what transpired. Then we took a little bit of a rest, and now we pushed back to almost flat on the year across the board in many different sectors. So the question is, what to do if you're here the next day or so? So first things first, overseas is not really giving us much to go on. Europe is basically, down small. And, Europe really has been, a non-event for a while. If you look here real quickly at the Germany or the HEDJ, if you remember in the start of the year real quick, you had this huge first quarter trend where it was above the 8-day and the 21-day moving average, which showed a lot of momentum in Europe. And pretty much since then, it's been, a choppy mess where, you have this series of lower highs besides right there. And this really hasn't done much off of that low. So there's not much talk about the weakness in Europe, but basically this is, still very technically weak considering it's below all the moving averages. Now, the reason why this is so weak is because it has the, the dollar hedge. If you switch to EWG, which is just Germany itself, without a hedge on top, okay, it's still below the 200-day moving average, which is something you could look at into the beginning of the new year. Can this get up and go above this, 27-22 area to start a positive, move to 2016? It has held higher, and actually this looks a lot like our actually not like a little bit similar to the S&P, except for we're a lot closer to the highs of our year, but we also didn't go as much as Germany did in the first quarter. They had a heck of a start. So let's just get into the SPX, because if you look here at the SPX, went over it many times, and in hindsight it always looks so much easier, doesn't it? Okay, first of all, remember this. The low here from August after that flash crash, when the market broke below this inside wedge. Okay, well anyway, here was your low, here was your double bottom, and this is when it took off above this W pattern. Left, boom, 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 W. Above it, back to the highs. Then pretty much it, consolidated for, the past 3 months. And now it's coming close to the upper end of the range. So this was where we were to start Christmas. Quick move up. Weren't sure what would happen this week. A little bit of a 2-day pullback, and then last, the first day of the week, we opened soft, reversed up, and then yesterday had some power. So the question is, with the futures down, 2-3 handles today, what could you do if you happen to be trading and you have some positions and you're trying to maneuver? So, I would think that this area, if the bulls want to stay in control, should hold. Okay, the prior high was 2,064. We hit as high as 2,081 here. So I would think this spot would be constructive to hold into end of the year by the bulls. Might even go a little bit below that. So a bit of an inside day would not be so bad. And another way to look at it is if you go to your 5-minute chart to see where support is from yesterday, you'll see that really this was the first move. So this would be support 1. So I know I have a spider hedge on, so I would think that if we can get down to 2072, which in the spiders just say is 207-ish, I probably will look to cover, or a little bit below, cover my spider hedge, from my longs, and then see how the market or how it handles this gap up. And this gap up starts at 206.47. A lot of times this year this gap gets filled, so you don't want to start too early, but if this gap remains open, heading into the end of the year, that could have some power there. But for now, this would be your support 1 area. If the market wants to act very strong, this area holds. If you sold some strength, this would be your first stop to probably buy. This will be my spot to cover the spiders and maybe even look to get long. As far as sectors, let's just talk about where the weakness is coming from this morning. It's oil. API inventories, I think, was last night. Big build. You go to the USO. let's go back to the daily chart, and you'll see that the USO that did have a stronger move yesterday, okay, is now almost giving it all back. So with that being said, I would think that the oil bears, okay, that keep calling for $25 a barrel, et cetera, would get a little excited if you get a close below 1091. So at this point, there is, it looks like there could be a little bit of a head and shoulders bottom type pattern here, to enter the new year, but you got to stay above this, go sideways, so this way at some point there's a neckline, and then perhaps you take out the 21-day, which we've been below for quite some time. Remember, you are not long for swing trades in the oil names when you're below the 8 and 21-day, and it's not even an investment unless it's below the, above the 200-day, and the 200-day in oil is still all the way up here. So we're just, trying to look at this surgically. XLE also, didn't do much yesterday, opened up and kind of failed. So you'll see this is, the line in the sand. I am actually long a little XLE, and if it gets below 60.14, I'm probably gone. And in order for this to look decent, okay, heading into the new year, you would think that this spot would hold. You go below it, and it's probably trouble, okay? Again, not much of a rally considering, where it was, and, couldn't even get up to there yet. So I'm thinking if the market wants to be any good, and you need some participation into the first quarter of the year, January, that this could see at least 65, but in order to do so, it's got to hold this area. And look what happens if you would have followed lots of rules that we talk about and got rid of this when it broke the 21-day or below the 200-day right there. You're talking 92. Got cut in half after. Could have hurt if you bought up here, but if you used your stops, boom, you're out of that mess. And that's what we try and do. We try and have rules so we don't get in a mess. On the stronger side, technology led yesterday. I'm not going to get into that chart. I think the IBBs today are worth a look again. I talked about perhaps a technical trade yesterday above 340, and it did happen. So some guys probably made some decent money yesterday in the bios. They were strong yesterday. You had this at least a tight pattern here going sideways. Oops, sorry, hold on. Let me just grab my pen again, my virtual pen. It did break above this, and we talked about getting up to here. This morning, probably a little weaker. I think if you could see 340 today, or I would say 339, this would be a spot to buy the dip, especially if you sold into that strength. If we had a sharp move below, like here, remember when it tried to break out and broke below with some force, that led to a move lower. So if this is going to be healthy, you would think that this, 339-ish to 340 holds today and potentially tomorrow. And in the bios, I want to just show you AMGN. I think AMGN looks really good. It was strong yesterday. It's trying to break above this range here. So if you're long it, keep it on the radar. It might need new flows, but this looks really strong if you can get above this spot here. This spot here is, I believe, close to 165, above all the moving averages, showing strength. Let's see what CELG looks like. CELG, different type of pattern, but this looks okay also. You have a big gap up to reclaim the moving averages, a little bit of a bull flag. So if this were to get above this spot, okay, which is closer to 123, I feel like that could be something to stay on target for you going into the new year. And let's look at GILD real quick. GILD, not as healthy. Okay, it's been trapped in this downtrend, and I guess until this changes and maybe takes back this with some force, this is not the same as the other two that I just mentioned. So that was just a little bit of a touch on the bios. For us, the real action starting 2 days ago was the move in Amazon and Google, which I talked about here. I remember I came in on Monday. I'm like, Google front cover of Barron's, very, very tight. Was quiet last week. Same thing for Amazon. Let's see if we can get some relative strength. At the end of the day, you had a day one, and then yesterday you had a day two in both. So really nice trade for some guys on the floor, and especially in the VTF. At this point, I think most people probably went out flat because typically, you like to buy on a day one. Here's your day two. So now if you did get flat, let's see if you could, buy Google a little closer to the prior high here. What was the prior high here? It was 793. So 790, 793-ish, if this is any good, that probably holds and goes sideways. It did hit as high as 798. So, $5 cheaper than it was at yesterday's highs, if you could see that. So that's where, if you are flat Google, I would see if that would be a spot, to come in and look to, buy the dip. Amazon, the same similar type of strategy. You had your day one breakout right here. Look how tight that was, as it was above the 8 and 21 day, which shows momentum. You don't short stocks above the 8 and 21 day, even on valuation. Okay, so here, if you take a closer look, okay, that was your day one. You got your day two strong above this prior resistance. So this is probably, if it pulls into this spot, would be a spot for it to hold, and that spot is 684-ish. So 684, after hitting 696, would be a spot tactically to perhaps buy back, and then let the moving averages catch up. Nice day and a half move. So you're talking about day and a half moves. I'm wondering if Tesla could have it. Tesla had a decent wide range bar yesterday. So this is your close-up look. Okay, so this was a nice trade for us. I actually got long it, and I'm still long it. And I'm wondering if, I don't know if it takes a day or so, if it were to be able to clear this spot. So I'm going to look to see if I can hold it. I'm hoping that it, holds 235-ish, and if it does, maybe there's a trade above this 237.72 to get to 242. Still, considered an overvalued stock, and you only trade it when kind of the momentum's there. And it does seem like it's got a key level here, and it was worth getting long yesterday. And it'd be nice if it just doesn't fail and we get some kind of follow through into the moving average either today or tomorrow. So put Tesla, keep it on the radar. I haven't traded it in a while. Yesterday was my first entry there. In social, Facebook, great also trade. I came in long Amazon, Google, and Facebook yesterday. I took off Amazon and Google. I kept my Facebook just a little less, and now it's trying to get above this pennant. I think if you sold into some strength, a good spot to buy back would probably be close, if it sees it. I don't know if it'll see it, close to this 106 and a quarter. So holding 106 and a quarter and going sideways, in my opinion, is healthy. And then if it could go from red to green today, who knows? If perhaps you get even better action above this pivot, and yesterday's high is 107.74. So I'm in some overnight, and I'm looking to see if I could buy into support for it to perhaps hold in there for a better move into January. LinkedIn really is not doing much, not much to talk about here. It's, I guess, trying to turn the corner. This is one resistance area. I guess this would be your other resistance area. So it's hard to buy strength in the stock because it's very thin and not a lot of volume, but above 230, 267, maybe it starts acting better. It's a nothing but pull in and grind lower and frustrate people ever since the earnings move. But into here, maybe there's a spot. That's what we look for in spots. In mega cap tech, Microsoft and Intel have been the strongest. Microsoft, I talk about buying dips all the time, and could have been my note. I'm like, this could be the first mega cap tech to make new highs on the year, and it did. It's not really stretching. There's not a lot of action there, but if you keep buying those dips and it keeps riding the 8 and 21 day, it's looking good, and that's helping tech. Intel also. I haven't been active in Intel, but a lot of people have been talking about how the stealth strength in Intel, which has been helping obviously some of the semis. So make sure that continues. It's almost back to prior highs here. What isn't strong though has been Apple. Apple's been broken and relatively weak for a while now. Yesterday it had a little bit of a push. So the question is, can it push a little bit more into the new year? Overall, the spot to have sold your Apple was when it broke this rising trend line and went back below the 200-day here. So at this point, it's trying to hold support, and I'm not sure, what's next here. Everyone has been ratcheting down their iPhone numbers, and at some point, there'll be no one left to do it, and then maybe it could bounce. So, I did get long a little bit yesterday, thinking that perhaps there's a trade, back to this spot, and I could be a surgeon. But buying a weak stock for something like this, you have to be quick. So today we'll see if it can get above this spot. If you can get above 109.43, maybe there's a trade back to the 110, 111-ish area, and that's not saying a heck of a lot. If it were to break below this spot here, I'd probably be out of it, as I'm not over trading Apple. I don't even think I touched it once until late in the day. And overall, the macro pattern still is looking pretty more bearish than bullish. If you look here, you can see what I'm talking about, how you have your left shoulder, your head, your right shoulder, and that's looking pretty ugly technically below every moving average. You could draw this many ways, and that would from 130 down to 110-ish. That's 20 points. That's a measured move way down to this area before anything substantial to the upside could happen. But the question is, can you get a little bit of a push first? I'm not sure, but we'll see what happens. Like, as I said, if you're here and it's calculated, maybe you find some things to do. The casinos, WYNN, a lot of you guys have a call spread with me on now, so I'm not over trading it. It did poke its head above resistance here. It's still a broken name, but I was thinking that, it could be a good January effect type name if we can get through this and, see this at some point into mid-year. It's been absolutely annihilated. Most people are not in this because it's broken every moving average in the sun. Just the question is, can this lower base down here give, another move to the upside? I know Steve Wynn bought 1 million shares somewhere in here. So I think some of us bought this, the options around 65 and sold when it hit 70, sold to 75. So, I also am looking to trade it if it could continue. It pushed a little bit yesterday. There's some news coming out soon out of China about Macau, so I'm thinking maybe that could be a catalyst. But if it's not, that's why I'm not holding the stock and I'm holding options, because risk is premium paid. But this looks kind of decent there. And to wrap it up, metals. I tried it last week. I got stopped out. GLDs have been very quiet. Some guys still think it's in the process of building. Kind of inverse head and shoulders pattern is going to break above this spot, but I'm not so sure. I would say if anyone is still in this as far as an active trader, they probably would get out if it breaks below 102 and closes below. Here's your next support where this gap is, and this gap is closer to 101.30. But for me, it's such a negative trend and it's had so many headwinds above it. There's not much in there. I was trying to do it for a trade on this day. I was in it and got stopped out here. And now I'm just going to avoid for a little bit. So in closing, it's funny. I was on Fox Business yesterday and everyone was making such a big deal that the indices might be flat on year. It's kind of cute the way they do it. So when people get their statements, they're not as upset by the market if they're in these macro mutual funds or for headline purposes. But we all know how the year has been pretty tough. When they've looked great, you've had to sell them versus add to them. When they've looked horrendous, they've bounced instead of pressing. Weak stocks got absolutely annihilated further than people would have thought. And then a lot of the high beta names that actually have been strong, a lot of ranges, and the ranges resolved higher into the earnings report, so you had to take event risk. So there was not a lot of easy trading this year. There have been pockets where there's been continuity. The 2-day move in Amazon and Google were probably the cleanest move we've seen in those two names in the entire year without having any kind of event risk. And pretty cute that they do it this week. But anyway, the last 2 days, I wouldn't expect too much. Maybe they try and hold the market in. We'll see today. I went over the levels of the spiders that I think the bulls need to defend if we're going to stay, constructive as far as momentum versus going back in the range. We'll see if oil becomes a headwind again by breaking below that USO number I gave you before, and then we'll see if high beta tech continues to, be bid for, and if there's any momentum around. And if not, don't push it. The last thing you want to do is get yourself frustrated and stressed as we head into the new year, which is, New Year's Eve is tomorrow. I'll be doing the recap today. It'll probably be my last video of this year. So looking forward to seeing you then. Good luck today, and I'll see you on the VTF.